Look at the headlines and you might find yourself thinking, oh no, the housing market's in a bubble, it's gonna crash. And that might cause you to say, I'm gonna sell my house now and wait for the market to crash. Or, I'm not gonna buy a house right now because I'm gonna wait for the market to crash. And I think that is false thinking right now. In 2007, the housing market started to drop. The stock market started to drop around the same time. And then it absolutely plummeted in 2008 and then hit its rock bottom in March of 2009, and since then has been on pretty much a steady increase ever since. The housing market took much longer to go down. It hit its bottom and then it basically stayed flat for another 3 years. So the pricing dropped until 2012, at which time it started to rise again. The stock market by 2012 had already gained almost everything it had lost in that 1 year period of time. So what does that show you? Why am I telling you about that? The housing market is slow to respond to things. It's because of the illiquidity of the product. You can't just say, sell my house, and it be sold like you can with your stock portfolio. Stocks can take dramatic decreases and dramatic increases in just a matter of days. And housing, it can't do that. There's a lot of things that go into it that causes the housing market to be much more sluggish than the stock market. So when you say the housing market is going to crash, what you're picturing is, well, today my house is worth $250,000, and in 3 months it's going to be worth $200,000. And that just doesn't happen. There might be some very unique situations, but as a whole, as a general economy, the housing market can't drop that fast. Interest rates don't jump from 5% to 10% in 2 months. It just doesn't happen. And so the housing market is a slow beast. It's slow to decline and it's slow to increase. And ultimately, when you say the housing market's going to crash, you're not going to see that happen. Even if it were to start today, it could take 2-3 years for you to actually see the full results of what's going to happen. So if you're sitting on the fence trying to decide whether to buy or not, you could be sitting on the fence for many, many years. And the market might go up for another 3 years before it goes down. And so I would not encourage you to wait to buy a house because you think the housing market's going to crash. Because I don't think, for one, it's going to happen. And two, if it does happen, it's going to take a long time. So during that time, you're going to be sitting and renting and not getting the benefit of your house going up in value. Another point that I do not think the housing market is going to crash, and this relates particularly to homes that are in the first-time home buyer price range. So that's going to vary slightly from city to city. If you live in San Francisco, your starting price is going to be much, much higher than if you live in Boise, Idaho. But in general, the first-time home buyer market, whatever that price range is, in my city that's under $250,000, as a nation as a whole, it's under $250,000. Those houses have gone up faster in value than the market as a whole. And why is that the case? I think that's the case because there are many, many potential home buyers who are not in the market. Maybe they're keeping an eye on the market, they're saying I want to buy, but they're saying I can't afford right now and I'm just going to wait until the housing market crashes. And so anytime you see a slight lull in the market, you get a bunch new home buyers who jump in and that lull is totally erased. One of the statistics is, historically speaking, first-time home buyers take up 35 to 40% of houses sold. So if you sell 100 houses, 35 to 40 of them will go to first-time home buyers. But that number has been very much lower over the last 10 years, which means there are a bunch of people who would normally be buying houses in a normal historical setting that are not. Maybe it's because they have student loans and can't qualify. Maybe it's because their income doesn't match the price of the market they're in. For whatever reason, there's a lot of people who aren't buying. They're renting, they're living with parents, whatever they're doing, they're not buying. That doesn't mean they don't want to buy, it just means they're not. In this first-time home buyer market, I don't think we're going to see a decline at all for quite some time, because anytime there's a slight decrease or reason to motivate those people into buying, they're going to jump in, they're going to snap it up, it's going to cause the prices not to go down. Let me use a basic stock market analogy to illustrate why I don't think the housing prices in the first-time home buyer market are going to be dropping anytime soon. This is a basic example. It's not because I think you're dumb or anything. It's because this is how I understand it myself. This is how I simplify the complexity of something like the stock market. Let's say 50 people own Apple stock at $1,000 a share, and 50 people want to buy Apple stock at $1,000 a share. If that's the case, there's as many people wanting to sell it as many people wanting to buy it. The price will stay consistent. It will stay at $1,000 per share. The seller says, I want to sell it at $1,000. The buyer says, great, I want to buy it at $1,000. And it stays the same price. It doesn't go up, it doesn't go down. Now let's say something happens, maybe Apple makes an announcement that their iPhone sales are down. The 50 people who own the stock at $1,000, they say, I think this stock has reached its peak. And all 50 of those people say, sell. On the other hand, the buyers who have not yet bought Apple stock also hear that news announcement and say, I think the Apple stock has reached its peak. I'm going to wait to buy it until it drops. So now what's happened? You have 50 people who are saying sell, 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 and you have no buyers. Because the buyers are saying we don't want to buy it at $1,000, and the sellers are saying we want to sell it at $1,000. No one buys the stock. So then some or all of those owners of the Apple stock say, okay, let's lower the price. I'm going to drop it to $900 because I need to sell this Apple stock. So 50 people are now offering stock at $900. And the buyers, you get 25 buyers who jump in and say, great, I want to buy the Apple stock at $900. So 25 people sell their stock, 25 people buy. Now where are we at? Now you still have 25 people who want to sell their stock at $900 and you have no buyers who want to buy it at $900. So what do those remaining 25 people do? They lower the price again. Okay, well if it's not going to sell at $900, let's drop the price to $800. And then you have 10 buyers jump in and say, okay, I'll buy it at $800. I think that's a good deal. So those shares are pulled off the market again. Now you've got 15 people left who want to sell their Apple stock at $800, but there's no buyers. Either the Apple stock owners say, you know what, I'm just going to pull it off, I'm just going to wait. I'm going to sit through it and wait for it to go back up again. I'm not going to sell it at $800. And let's say 10 of those 15 people do that. Now you have 5 people left who own Apple stock trading at $800, but they want to sell it, and you have no buyers. Again, they drop the price to $700. The remaining 5 buyers jump in, and they buy the stock at that $700, and the stock stops dropping at that point. You essentially have no buyers or sellers left at that price. That's when that's when it hits its bottom. Now, for it to go back up, what needs to happen is you need to have more buyers come in and say, we want to buy Apple stock at $700. But the problem is, no one wants to sell their Apple stock at $700. So the buyers then have to say, okay, we'll increase our price. We want to buy Apple stock at $800. And you get some sellers who used to be buyers. Those sellers who bought it at $700 say, oh great, I'm going to make a quick profit. Sell for $800. Those buyers are satisfied. But there's still buyers left who want to buy Apple stock. There's no sellers, so they have to increase their bid price. And I hope that makes sense. If there's an equal amount of buyers and sellers, at the current price, the market stays the same. If there are more sellers than buyers, the market goes down. If there are more buyers than sellers, the market goes up. And this happens very quickly in the stock market. It happens much slower in the housing market, but it's the same thing. And that's what we saw in 2007, 8, 9, 10, 11, 12. There was a large number of houses on the market, and there was a few number of buyers. And so the buyers had the pick of the market. They could make whatever offer they wanted, and the seller was really limited in what they could accept, especially for those banks who own their hundreds and thousands of foreclosed properties. So that's kind of the general idea of how things go up and down in the stock market and in the housing market. So right now, what's happening in the first-time home buyer market, again, that houses 250 or under in most areas, you have had for the last 3, 4, 5 years, basically since 2012, you've had more buyers on the market wanting to buy their first home than you have had sellers offering to sell their home. Because those sellers were waiting through the dip until the prices started to go back up. As the prices started to go back up, more sellers started to bring their houses onto the market. but there was still more buyers than sellers. That's why in many markets over the last couple of years, a house would go in the market and within a couple of days they'd have 2, 3, 5, 10 offers on the property. I listed one property, it had 12 offers on it in 5 days. And that wasn't unusual at the time. It's because you had way more buyers than sellers. The more buyers there are, the more that price of the houses that are available will continue to go up. Where we're sitting today is, yes, the housing prices have gone up a lot, especially if you're in the price range where houses were under $250,000. Those prices have been pushed up faster and farther than houses that are, $500,000, $600,000, $800,000. And until there are fewer buyers than houses on the market, the prices of those homes will continue to be steady at the very least and go up is the most likely scenario. So look around your situation. How many people do you know who aren't in a house yet but want to buy a house? As long as there are people that are sitting there waiting, the housing market is not going to drop in that price range. Because as soon as it drops, let's say houses are selling at $250,000 right now. Price drops from $250,000 to $245,000. Well, you're instantly going to get people that jump back in who decided to wait to snatch up that house at $245,000 that they couldn't afford at $250,000, which is immediately going to drive the price back up again. All that to say, there's a lot of first-time home buyers in the market. There's a lot of demand for the lower price-ranged home. And so until that demand is gone, the housing prices will continue to increase. So what's the moral of the story? If you want to buy a house and you're in that price range of the first-time home buyer market, again, whatever that is in your city, then I encourage you, buy it. If you can buy it now, go and buy it. Because what I'm afraid for you, if you're sitting on the fence waiting for the housing market to drop, is that it's not going to. When it does, it's not going to drop below today's levels. Let me give an example. If my house is worth $200,000 today, and it goes up 10% each year for the next 2 years. So that means next year it's worth $220,000, and the year after that it's worth $240,000. And then the housing market drops 10%, which is a pretty dramatic drop. My house is now worth $240,000. I lose $24,000 worth of value. My house was worth $240,000, now it is worth $216,000. That looks like a great deal for a buyer in 2 years because it said, great, I got this house 10% off. However, it's still priced at $216,000, whereas today it's priced at $200,000. The likelihood, in my opinion, that you're going to win by waiting for the housing market to drop is unlikely to take place. I could be wrong. It's been known to happen, but I wouldn't wait. And during those 2 years, 3 years, you're going to be renting. Unless you're able to save a huge amount because of your renting situation. If you're in a situation where maybe you're living with parents and they're not charging you rent, and you're able to sock away $1,000 a month, $1,500 a month, then stay there. Stay there until you get to the 10 or 20% down payment and then buy a house. That would be a unique situation. But if you're renting at market rent, if there's any possible way for you to buy in reason that fits in your budget, which you can watch my previous video about common mistakes that home buyers make, get into the market and buy it. And you know what? If it drops a little bit, it's gonna come back. And so that's the beauty of buying a house that you can actually afford. If the housing market drops a little bit after you buy, so what? You just wait it out. For the people who've owned a house for the last 20 years, the housing market collapse in 2007 to 2012, it didn't matter to them. Maybe it changed their plans a little bit about when they were going to sell or not. But their house was worth $200,000 in 2007 when the housing market peaked, and their house is worth more than $200,000 now a few years later. So, buy a house. If you can buy a house, buy a house. If you can get yourself into a situation where you can get cheap rent, maybe get some roommates, maybe pair up with another couple and live in a 2-bedroom apartment, and just pile your cash, get your down payment, go out, buy your house. Don't be waiting for the housing market to collapse, because I just don't think it's going to. Now, if you're looking at prices in the $500, $750 million range, that's maybe a different story. I'm talking about the first-time home buyer market. I'm talking to you if you're a first-time home buyer, wannabe, or I'm talking to you if you're an owner of a house that would fit into that category. So let me talk to you real briefly. if you own a home that's in that first-time home buyer price range, you kind of have your choice. You can decide to hold on to it and likely see still good price appreciation. Or you can be a good citizen and put that house on the market so you can supply one of those first-time home buyers with a house. If this video was helpful, like it, subscribe to my channel. If you have further questions, write it in the comments. If you're liking this topic, let me know. I think it's an interesting topic for many people, but until you tell me yes or no, I don't know the answer to that. Thanks for watching. Until next time, take care.